Hi, everyone. Welcome to the latest Carson's Take 5 with Ryan and Sonu. Sonu, we're going to title this one, Are Things Too Good to Be True? I mean, let's think about it. The economy's strong. The Fed is probably going to start cutting. There's all these different things that are going on that are real. And the stock market's all-time highs, by the way. Are things too good to be true here, Sonu? Should investors be worried right now?
Home prices are going up as well.
Yeah.
Right. I'll add that to the mix. The labor market looks good. Consumer confidence is going. So, the households are saying things are actually getting better. But the worry here is, even if you take the economy just clocked in at 3.1% year over year after adjusting for inflation in 2023. That's well above the 2.4% pace we saw from 2010 to 2019. Even 2017 to 2019, it was 2.8%. That was a relatively strong economy, right? We all think about it as such. And in 2023, real GDP growth was better than that, right? And so then, getting back to your question of, and the title of this Take 5, is that too good? And normally you think, okay, if the economy is too hot, why would the Federal Reserve cut interest rates? You normally think, okay, inflation would go up if the economy is too hot. Instead, what have we seen? Over the last 6 quarters, inflation's come down, right? If you take away food and energy have been going down, but set that aside, right? If you take core inflation, which is what the Fed says they care about, that's in 2023, that was up 2.9%, right? A year ago, that was 4.9%. So we've seen this big deceleration in inflation, right? Or disinflation, if you call it that.
Right.
But again, if you just take the last 3 months, inflation's running at 1.5%. That's well below target, right? So we are in this very good place where the economy is running really strong. The labor market is strong, but inflation is below the Fed's target of 2%.
Well, that sounds pretty good. So again, when we get to talk to people out there, I mean, the worry I hear, Sonu, is listen, stocks are up a lot, hitting all-time highs. Remember, people were very worried this time 15 months ago in the midst of a bear market, and now we're worried because stocks are up too high. So let's just kind of put some context around this. It took 15 months for the S&P from the end of that bear market to make new all-time highs. But now, should we be worried? Should we be concerned? We'd say no. As you just laid out, the macro backdrop, the economy is still quite strong. We have a Fed that, want to keep this real high level and fairly simple. The Fed is probably going to start cutting sooner than later. That's going to be a tailwind probably for the economy. Stocks are probably going to like that as well. So there are lots of worries. There are lots of concerns. We're not naive or ignoring what they are when you turn on the TV and hear them. But we've been in the camp that, this economy is stronger than people give it credit for. The stock market's probably going to continue to do pretty well. And we think that's really the case going forward. Now, one thing I do want to point out, one more thing here. Sonu, the time we're recording this, 3 months ago was the October lows. Stocks gained almost 20% in 3 months. That's one of the greatest 3-month rallies we've ever seen. So the logical question, is this too good to be true? Should I be worried? When I took a look, Sonu, at previous times we had huge 3-month rallies, you know what tends to happen? Stronger performance a year later, up like 15% a year later after previous times we've seen surges like this. So yes, this is a huge surge. Maybe near term we have some consolidation, some back and fill, but the economy remains strong. History would say a year from now, we'll probably be looking at, solid double-digit returns, if not a little bit higher. So we've got about 90 seconds to go. Let's talk about, again, if things are too good to be true, what could make things too good to be true and truly be a problem? What could worry you to upset this apple cart for this bull market and strong economy that we fortunately are living in right now?
I mean, all else equal, you want to see momentum, and we're seeing that in markets and the economy. So if you think back to at least more in recent history, right, what's upset the apple cart? And right now, I honestly think it could be the Federal Reserve, right? Because now, like I said, the risk of inflation spiking up has gone down. Yes, I just quoted the numbers, like last 3 months, core inflation is running at 1.5%. In fact, headline inflation, once you include food and energy, is running at 0.5%, right? So it's even lower because energy prices have gone down, right? So if you think about, if anyone's worried core inflation doesn't include the stuff I buy every day, sure, include that. It's running at 0.5%. That's well below the Fed's target. So if you think about, okay, the risks are now gone to the other side, that something could break in the labor market, right? And I think that's what the Fed is looking at. If the Fed decides, we are going to push back against markets and tell markets that we are not going to cut rates, right? I think that's the biggest risk here for the economy and for the markets too, honestly. If the Federal Reserve says, we are going to wait and wait and wait, to see how much ever more data, and only then will we cut. I think that's a risk, and the longer rates stay higher, the higher the probability that something breaks.
Got it. So with all of that, again, this was the latest Carson's Take 5. Are things too good to be true? We'd say, you know what, things are pretty good, but we're not too overly worried they're too good to be true. This economy likely continues to grow, and the stock market likely continues to do pretty well, hitting new all-time highs. Well, with all that, everyone, thank you for watching. We'll see you next week.